could I ask you first just describe or give us the name of your company and broadly what you do?
Yeah, absolutely. So I'm Emma Steeley. I'm the CEO of AccountScore, which is now an Equifax company. We were acquired by Equifax in February of this year after 3.5 years of partnership. As a CEO, I've been with the organisation since the beginning in 2016. We obviously connect to the open banking APIs as an AISP. Our AISP is called Consents Online. And so we have obviously access to the data, but importantly, what we do to it is we translate that data into usable, meaningful data that enables primarily real-time lending decisions in consumer and commercial lending.
Gotcha. Okay, brilliant. And when it was originally set up, that you said a partnership, so what was the initial idea? What was the gap you saw in the market? Or
yeah, absolutely. So my background is very much consumer lending. I've been in consumer lending in the UK since 2006, and then I've at AccountScore's old sister company, was the first lender in the UK to underwrite a line of credit using bank transaction data that was at the time sourced via screen scraping. So I've been working in bank transaction data now for a decade, which makes me seem quite old for that. But yeah,
time flies when you're having fun, you know?
Yeah, absolutely. But effectively what happened is, as a balance sheet lender, it took us about 3 years to figure out how to write a profitable line of credit, because the data, when you first receive it, it's kind of all over the place, and you just have to try and work through and understand, you know, if you're looking at income and affordability, what is essential spend, what is discretionary. Once we figured it out, it made us understand how immensely powerful the bank transaction data was when it comes to making lending decisions. And it was actually at that point that it was competitors of ours that came to us and said, look, you know, we've tried to use the bank transaction data, we find it really hard. Would you commercialize what you've built, and we'll become your clients? And so that was in 2015. So we knew open banking was on the way by that point, and thought, right, if we don't go to do this, then somebody else will. So that's why we set up the organization in 2016. And then with Equifax, in 2017, they decided that they wanted to find an open banking partner, because they very much recognized there was value in the bank transaction data. And so they sent out and they did a data exercise, and we all had to sort of perform. There were sort of 4 selected parties, and we had to do a data file in a 24-hour period and return it. And so we then won that partnership with them. So we've sort of carried on working through, and it ultimately led to acquisition.
From the credit scoring service you provide, tell us a bit more detail about the end user journey is, the benefit, and how you use open banking to facilitate that.
Absolutely. So when the guidance from the FCA first came out in the middle of 2017, it became very clear to us very quickly that you needed to have that B2B2C model in place. And actually, if what was being said at the time was going to be true, consumers would start to share their data. And if they're sharing it with multiple parties, it wouldn't take long for consumers to share their data 20, 30, 40 times a month, and then have no idea who they've shared their data with, on what terms, or have any control over their data, which to me completely negates the point of open banking. You know, it's about
to the ether and everyone's dipping in, aren't you?
Absolutely. So that's why we created Consents Online. So Consents Online, and you know, through our clients, what we do is obviously we access the open APIs on behalf of our clients. So obviously the consumers giving their consent, and then from there we have the consent management platform in the background. So what that enables the consumer to do is either to go onto the portal and then be able to manage their consents and view their consents, and importantly control their consents if they want to revoke their access, if they want to reactivate it. So we have a full consent management suite that sits behind Consents Online. And so the way in which it tends to work in terms of the sign-up process, we sit primarily in a lending decision journey. So imagine if a customer has gone through, applied for an unsecured loan, has either not been enough data on the credit bureau, or, as has happened during COVID, lenders just want more information to be able to ensure that they can actually make the right lending decision. So at that point is where open banking is then introduced. So it sits as an iframe within the lender's journey. The consumer then shares their data. And then obviously once we get the data in those milliseconds now, which is so nice, out of the banks, we're then able to get that data, normalize it, categorize it, run our recurrence engineer at the top of it, and deliver that back to the lender so that they can make that decision in real time. So the consumer is getting that immediate benefit of sharing their data, but then afterwards has that additional benefit of understanding, okay, have I given, if I've done a one-time access, fine, that's done. But if it's a recurring access, do I want to continue to give this? What's the advantage to me to do so? And then have the control from there.
So consumer sees the opportunity to get an immediate decision on the lending.
Absolutely, and can also, because they would also, for the thin file population, a lot of, just because you're thin on bank transaction, thin on bureau data, does not mean you're thin on transaction data.
Right,
and so, and in terms of looking at things like income verification, certainly in the world of the gig economy, it's really critical to have as much data available as possible to ensure that you're making fair lending decisions.
For both sides and both ways, whether it's
absolutely yes
or can, yeah,
absolutely. I mean, lenders would definitely, and one of the things that clients would say to us is, it's going to be too much information, and there's no doubt that you would say no to some people that you may have said yes to before, but that's a good thing, because you're saying no to the people that maybe cannot afford it, or maybe in a vulnerable situation, and that needs to be addressed.
Yeah, too right. I mean, I background of a bit of lending in my NatWest days, and it's almost more critical. I remember somebody saying to me once that the bank manager told me when I was a young lad, he said, "But I don't ask them how much they want. We sit down together and work out how much they can afford to pay me, and then we work from that. Say, right, I can lend you." It's turning that around a bit, which was just a revelation when I was 22 yes. or something like that. I want £1,000, and I suddenly saying, "Well, how much can you afford?" What? But it makes sense. Okay, I'm digressing as usual. I'm wandering off. Okay, thank you for that. So you've probably partly answered the question, but I will just ask it again. What are the key benefits to the bank or the other financial institution with your solution?
Do you mean as my clients, or as the
bank and financial institutions specifically? Who are your clients? It's just
my clients are the banks and financial.
Yeah. I suddenly thought I'd got the wrong end of the stick.
No. I was thinking. I just wanted to clarify that you weren't thinking of CMA 9 benefits necessarily there. So benefits to them absolutely is that they are able to identify income more precisely. They're truly able to establish affordability. They're able to make real-time decisions with verified information. Obviously I'm owned by a bureau now, but the bureau data is not up to date. So having that benefit of real-time information, and they're able to, when lenders first start working with us, they are dipping their toe in. So they are actually engaging marginal declines, and then they're able to lend to marginal declines that they've never been able to lend to before. So it's massively advantageous. There's a huge return on investment for the client, for the banks and the financial institutions.
Okay, makes sense. Good. So I think I saw from your website UK, US, and India. Is that correct? That's where you're active at the moment.
Yeah, absolutely, and just about to launch in Spain.
My next question was going to be, what's happening with Europe? What's going on there?
So obviously, we actually used to have our passporting into Spain and Ireland. Obviously, the delights of Brexit that ruined the financial service passporting for us, but that's probably another conversation for another day. But as we're owned by Equifax, Equifax are in the process of getting their license in Spain now as well, which will obviously open up the rest of Europe to us too. So yeah, we are good to go in Spain. In fact, we do already have some clients in Spain that would use another AISP, but using our analytics to overlay on top. So Europe, yeah, key market, but we're very much client-led there. But we do believe as Equifax that there's a huge advantage because there's so many territories where there is only negative bureau data that actually going in where as Equifax, as Equifax, we don't have a presence as yet. You're going into those territories and using bank transaction data to be able to solve that issue is a key strategic growth area for us.
Sorry, and just to clarify what you said there, something that for my own education, you're talking about that negative data, which was the old way. You're coming along with, you can do the negative, but you've got the positive data as well, and it's that mix that enables you to get that increased customer base. And that's
absolutely, yes.
Yeah. Okay. Thinking about the story you've told us so far, what's been the greatest challenge in getting this to market?
It's been the lender adoption, because lenders are very used to being able to retro bureau data when they're looking to build their credit risk models. With open banking data, that's not possible. It's consumer consented data. You have to collect that data and learn as you go along. So if you think from a chief risk officer's point of view, how long does it take to collect that data? They're not going to put something strategic in place immediately until they get familiar with it. So, it's been a process really of going through and working in partnership with our clients and using our knowledge and expertise to really guide them through in order to increase that adoption. So I think we're over the other side of that now. And I think with the lenders and clients that we're now working with, you're really seeing open banking being a strategic part of what they want to do moving forwards when it comes to income and affordability, additional insights like vulnerability insights and things like that.
So yeah, and I can see that anyone coming along saying, well, yeah, all right, you can tell us that this is really accurate and we're going to make us a fortune, but I need proof. So they'll put their toe in the water and they'll say, give us 5 and we'll watch those 5 for 2 years. But as a scenario I'm thinking about, obviously it may not all happen like that, but I know you'll be persuading him to do more than 5 and do more clients.
Absolutely, absolutely. And so it is about, it's that kind of having to have that trust in each other, work in partnership to be able to deliver it. But certainly, our recommendation right from the get-go was start small, but start soon. And we've definitely seen that tipping point now. And I think a lot of it is with the brokers and aggregators now engaging across markets. So whether it's mortgage, consumer lending, the SME lending side of things as well, the auto market. So with all the brokers and the platforms now really engaging, I think that's what really helps to drive that greater utilization.
And again, off my script again, but do you see the as we slowly and drag ourselves out of the COVID stuff, is that likely to show you greater opportunities as people want to get back on board and get going again, and they're obviously been struggling?
Yeah, absolutely. I mean, what we've seen through COVID, for us, we look at sort of growth from January 2020 to now, and we've seen sort of 300% increase on utilization. We've had, I think in February of 2020, we had about 80 clients. Now we're at over 180. So actually, the pandemic for us, with that shift to digital, for lenders that wanted to continue to lend, we sort of supported a lot of the CBILS lenders as well during that time, so that was the catalyst that really sort of forced the digital transformation to happen, which we benefited from. But now very much seeing, okay, how can we use, what other use cases are there for open banking, and it's really about working with the clients now to say, where are your biggest pain points? It's not about, okay, have you thought about open banking? It's actually really understanding their business, understanding what they need to address, and see if open banking use cases within open banking can help with those solutions.
So we've talked a bit about the Europe thing, and we know you're already going in India and the US. Anywhere else across the globe that says there's an area you're interested in?
Well, very much LATAM. So, you know, we are good to go pretty much in Mexico. You know, we have, you speak with the guys in Brazil as well. So LATAM is very much on the list. Equifax in Australia are already doing some work in the open banking space. So you're looking to work with those guys as well. And I think what's very important for Equifax as a global organization is actually, you know, ensuring we have, you know, a strong global open banking capability, because, you know, their clients are global clients, and you need to be able to offer those services across the globe. So that's very much our ambition as an organization.
Okay, super. And with that in mind, looking 2 to 5 years ahead, how do you see open banking doing? What's it going to be doing over that period?
Yeah, well, I expect it to be absolutely commonplace. I very much think that it doesn't need to be a sort of consumer education piece. I almost think of it as an incidental service, like you know, when we do secure customer authentication, for example, when we're paying for our groceries online. So, you know, I think that the regulation is a core pillar that's absolutely going to drive adoption. The regulator here, as you know, is not neutral on open banking. They positively encourage it, and I expect that to continue. And the other key factor is really the consumer demand. And so I think you have two very different approaches. The regulatory approach, I think, is the one that will drive in Europe and potentially LATAM. You know, in countries like the US and China, it's very much about the consumer demand and consumer adoption, that I want to do this, so let me do this. So I very much think it's going to be commonplace. And I think that, you know, in the world of credit, I think that all of the credit bureaus very much acknowledge that it's effectively the future for how to combine critical data sets that can really drive financial inclusion across the globe for the future.
Okay, that's good. And so for you and your company, what opportunities does that create to this growth over the next 5 years?
Oh God, I mean, I think it's limitless, really. So, you know, obviously we've been very fortunate this year with the acquisition. We had always envisaged, you know, that AccountScore would, we set it up so that we could change the face of global credit risk. We've now been acquired by a global credit bureau. So that for me is that key step that we needed. And now it's about, you know, working with Equifax through their transformation program so that we can deliver you know, the credit analytics to the rest of the globe.
Yeah,
and help to level up, you know, really you know, sort of level up on the credit risk perspective for that thin file population across the globe.